Well, hello, beautiful people. This is Jessica Jones with Taurus Financial Solutions, coming to you again with a little educational video. So today we are going to chat a little bit about starting to invest in the stock market. So a lot of my clients are going to ask me, especially younger clients, but all the way up through retirement age, how do I even get it started? I don't know anything about the stock market. I don't want to be super risky. Who do I turn to? Who do I trust? These sort of things, right? So if you're looking to go at it yourself and just get started, then a couple things. There are a lot of great platforms that you can go with. TD Ameritrade is one, Fidelity. I mean, there's several of these. I'm not endorsing any of them. They're all fairly similar, to be honest with you. So find one that you like. It's very easy to set up an investment account, especially if it's just an individual account. You go online and set it up with them, link it to one of your bank accounts and put money in there. So if you want to just set up an individual account, that means that it is not tax preferential, meaning not an IRA or a Roth IRA. It's just an individual brokerage account. You can do that with any of those platforms. Fees are very minimal, if any, and you can start investing like that. Now, as far as what to invest in, now none of this is investment advice. I'm just talking in very, very general terms. Obviously, you need to meet with a financial advisor if you want specific investment advice. However, in real general terms, you can, depending on your risk tolerance and how speculative you would like to be and how old you are and your time horizon for your investing, there's several different areas that you could invest in. So for beginners, I think that the most spread out, the most easiest way to diversify yourself without knowing a lot about investing is going with either mutual funds or exchange traded funds, which are called ETFs. So these are similar, and you've probably heard the terms, but basically both of them, they're similar in that they are both groups of individual stocks. So if you have a mutual fund, then it is a fund of several individual stocks. Same with an exchange traded fund. It's going to be a group of several individual stocks. You can have them specific to a certain segment of the market. For example, you can have a healthcare ETF or a biotech ETF. So that it can kind of align with whatever interests you have. Because I always recommend you having some sort of interest in what you're invested in. It helps you want to educate yourself more about it and learn more about it, number one, and it helps you not just bury your head in the sand and throw your hands up and say, I don't know anything about any of this, So the mutual funds and exchange traded funds are similar, as I said, in that they are both groups of individual stocks. They work a little bit differently in real general terms. Mutual funds tend to have a little bit higher internal costs within them than an exchange traded fund. And the other big difference too is that mutual funds cannot be traded throughout the day. So if you wanted to sell your mutual fund, it would close at the end of the day. Whatever the cost it was at the end of the day, that's what it's going to close as. Whereas ETFs, you can buy and sell all day long. So just like a regular stock, if you wanted to sell it at noon, it would sell at noon. Okay, it's not going to wait till the end of the day. So it gives you a little more flexibility as far as buying and selling, but they will help diversify your portfolio quite a bit. And I'm going to give you guys some more information on that as well, just a little tip sheet with this video. So that should get you started. With any questions, anything at all, any feedback, please email me, contact me. It's taurusfinancialsolutions.net. And I will be happy to create more content and go into a little more depth on different issues coming forward. So cheers to your health and wealth You guys have a wonderful day. Thanks.